This week, here on our free preview on YouTube, join us as we take a look at the unintended consequences from the Fed's rate cuts on the housing market. Sit back, relax, and join us as we take you through the numbers. Hi, Lauren.
Hi, Lindsay.
How are you?
I'm great. How about you?
I'm good. Normally, I'd ask you how your weekend is or was, but we are recording a little bit early.
Yes.
Because we were just so excited.
Yes. We conveniently had some scheduling hurdles to come over, but we are here at the end of the week after the Fed made their move, finally.
I feel like it was the biggest news. Everyone was waiting on bated breath. I was driving to a track meet yesterday and I Googled it and then started texting you.
When I got a text from you right after, I was still watching the press conference and you're texting me and I just had to laugh, like how far we've come. But this was the big news. So I do want to say that we had to jump right into the studio and get something out here. And I'm glad we get a chance to talk about it.
I know. And I had this grand idea because, you know, I'm the fluff sometimes of the show, and I love a good party. So
you are our party
this
planner.
morning I texted you and I'm like, should we get a bunch of balloons and streamers and have like a Fed rate cut party, but then pop the balloons?
Pop them. Burst everyone's bubble. Yes.
You know, I hate to be those people sometimes. We have to be, though.
Debbie Downers over here.
I know. Well, we just want to make heads or tails of any news.
And I think this is good news, right? As I keep saying, the big thing is that the rate cut cycle has now begun.
Yes.
And so we can take this, maybe I should do a mea culpa, but I was on the record so many times, time in, time out for months now, saying it's going to be 25 basis points. We're only going to see 25. Don't get excited about 50. It will be 25. Mm-hmm. It was 50 basis points. So I was wrong. I'm willing to admit that. I was a little surprised. The market had been pricing in about 50-50 chance of 25 or 50. So some folks got it right. Shout out in our office. We had a not a betting pool, but, you know, a pool going from
that
the
doesn't
Economist.
Shock me. Yeah.
John Olson was the winner with 50 basis points. So
he was the only one that said 50 basis points?
I think once he committed, no one else wanted to.
Oh my gosh, that's hysterical.
But yes, shout out to John, who's now our chief forecaster somehow for getting that right.
Watch out, Brian.
Yes.
Here he comes. That's so funny.
Yep. We have fun here as economists.
Yes, I'm shocked to hear that. No, so just to recap, the Wednesday's Fed meeting resulted in an astounding 50 basis point
50
cut.
basis points, yes.
So let's talk about it a little bit before we jump into any headlines this week. So big news.
This is big news. And again, it was not unexpected. We were very sure that something was coming. It was just a matter of 25 or 50. The outside folks said maybe 75. Again, I think that was never fully on the table. That would be, whew.
Yeah.
But 50 basis points, that's unusual. It's not unprecedented. So we'll put a little context behind it. If you think back to 2020, remember the sky was falling. COVID was, we didn't even know what COVID was at that point. The Fed did some very drastic, very unusual things. So I want to take 2020 off the table. The last time the Fed did make an initial rate cut this big, it was 2008.
And you're saying that wasn't as sky is falling as 2020?
Right. That was a pretty big event too.
Right.
So again, to put it in context, yes, we are on the same starting point as 2008. I don't think, though, that the fundamentals are really as dire as things were then. Obviously, right, we've shown the charts, we've shown the leading indicators.
Right.
The sky is not falling this time, but the Fed did go out big to begin this rate cutting cycle. The question now, and what, again, I have said from the get-go is what matters most, is where do they go from here? What is the total magnitude of cuts this cycle? To some extent, what is the path they take? Although, again, even the path doesn't matter so much as the ultimate total, right? That level of cuts.
Right. And I mean, I was in the camp probably more so because of your opinion, but I was in the camp of 25 basis points. I kind of thought months ago we dissected an article that showed rate cuts across the globe. And it
Right.
seemed that everybody's initial rate cuts all of the central banks' rate cuts were around that 25
They
basis
were.
points. So
And I guess
thought,
the point to make there is that the other central banks, not everyone, but many, the ECB, Bank of Canada, for example, they've already started. So
right.
if
We're
we had,
late to the game in comparison.
that's the question, is 50 basis points, right, to catch up? Because we
Right.
didn't start back then. Again, these are questions for future economic historians, not something we'll settle today.
That's scary to think about.
I know,
though.
isn't it? That we're
But yeah, let's jump into our first headline of the
Perfect.
day, and take a look at potentially some of the ripple effects that these rate
Yes.
cuts could possibly have.
Absolutely.
So the first headline is the Fed's rate cuts could have unintended consequences for the housing market. In summary, the housing market remains paralyzed by high prices and chronically low supply, but the action that could help solve America's home affordability crisis could potentially make it worse. So, as I just mentioned, you'd think that these rate cuts were a good thing. Now, if you're looking at it on a monthly payment basis, it's not so top heavy on that interest rate.
Exactly.
But I guess talk to us about why
Sure.
the Fed rate cuts could actually be a detrimental thing for the housing market.
Right. So what this article is claiming is that, and again, we'll look at some of the numbers, but a lot of this topic is predicated on consumer behavior that we just don't have hard data for, right? We can
Okay.
kind of postulate how someone will behave, and maybe they do, maybe they don't. But the claim here is that with this decrease in mortgage rates, a lot of those folks that we keep talking about who are on the sidelines, they're waiting to jump into that home ownership market, get that first mortgage, buy that first home. This is what will encourage them to do so. And all of that demand surging in, what is the impact that will have on
Right.
home prices? Well, maybe we'll be worse off with affordability than we had been to start. Now,
Yikes.
I do want to point out that kind of measure for measure, a change in your mortgage rate, it actually tends to have a much bigger impact on that monthly payment
Right.
than a change in home prices, right? You need a, a relatively bigger change in the home price to really make up even a small change in the mortgage rate. So again, a lot of theory happening here, but we'll put some numbers to it.
Yeah, I certainly think, having just been in the housing market myself, I can't say that the rates really influenced whether or not I was going to buy a house. I mean, maybe if the rates were at historically low 3%,
Right.
then I would have been able to buy a larger home at the prices that they are right now.
That's the question. If you're looking at the home price, I mean, you aren't really making your decision based on the dollar value of the
Right.
price. You're looking at, can I afford this monthly payment?
Yeah.
And you and so many other folks are doing that. So this changes the calculus of how much home can I buy? And if we can all now buy more home, maybe while the prices go up, it's not actually more house that we're getting.
Yeah, but I definitely think, I guess the question here is, are we going to put ourselves back into a position where offers are going astronomically over asking prices? I mean, that was still happening a couple months ago. I can't imagine now if rates are cutting.
Right.
That I think it might not be a change in the list price, but it might be a change in the
Yes.
purchase price.
You're tapping into something here, Lindsay, that I think is the crux of the issue. The real limitation to our housing market, it's not prices, it's not mortgage rates. The real limitation is the inventory available. We
Right.
have been underbuilding homes. And so there is that tight competition just because we don't have the number of houses available as we have would-be home buyers,
Right.
would-be homeowners, I should say. So you're right. There are a lot of mechanisms, a lot of ways this can work and ways things will balance. But the only real fix to the issue would be just having more housing stock. And we can't snap our fingers
No.
and make those pop up overnight.
No, I didn't pull the quote within this article, but there was a section that said the Fed can't build houses,
Exactly.
but
Yes.
it can help houses get built
Exactly.
by the rate cuts.
Right.
Hopefully that means that, things become more affordable. There's more purchasing power out there. I mean, I'm sure this is a topic for another time, but labor's obviously still an issue, or they
Labor
wouldn't
is
have cut
still expensive.
the rates, right?
Absolutely.
So you need labor to build the houses.
Correct.
The cost of materials is not going to deflate. It is not. It might come down a little bit.
It's not going back to 2019 levels. That's
exactly.
for sure. Yeah.
So I mean, it's truly, truly Econ 101 here when we talk about the housing market.
Yeah,
it's supply and demand.
It is. It's supply and demand.
There's more people, especially when rates are lowered.
Right.
The likelihood of there being more people willing and able to buy a house than there are houses ready for people
Exactly.
is going to be the true supply and demand issue here.
Exactly. And that's where we are. And we have seen this impact. I've heard it called golden handcuffs. I've heard it called the mortgage lock. But essentially, this environment we've been in where rates rose very quickly, a lot of folks either got their mortgage or refinanced their mortgage at very, very low rates. So to see mortgage rates so much higher if you're an existing homeowner, I know we talked about this so much. You felt this pressure. I'm really getting rid of my 3% mortgage rate to buy a 7% mortgage rate, right? You see that hit. So what this can do is it can lower that difference a little bit. If we lower the gap, that's going to encourage a lot of existing homes to come on the market because people will be selling their home to buy a new home, not first-time home buyers. So we could see some short-term boost here in inventory coming online. Traditionally, higher existing home sales do tend to encourage new home construction because builders see a hotter market and they say, oh, okay, maybe I should go, build this new home that I was on the fence about building. So we could see some gap there. But again, there's a long lead time to get that builder in the market, find the land and the labor, as you said, it takes longer. And to actually get that home built, this is, again, not an immediate fix.
Yeah, and there does seem to be some creative solutioning happening out in the market because, I mean, it might be specific. All real estate is regional, right?
Correct.
But if I'm taking the New England market, for example, we are seeing more multifamilies pop up because and multifamilies like condos for sale, not just rental units.
Absolutely.
Because then you can build one building essentially and get more people into one building, but essentially they're each getting their own home, you know?
That's very true, especially where land is limited, right, to be in kind of the coveted area.
I mean, I think we've pretty much developed all of the land in New England at this point.
Feels like that, doesn't it?
The only place to go is up. Well, that's all the time we have for today here on our free segment on YouTube. Remember to like and subscribe. And if you'd like to subscribe to full-length episodes, click on the link in the description below. Until next time, bye, Lauren.
Bye, Lindsay.